Welcome to ForexTV.com. It's Tuesday, January 8th. I'm Remy Hokie for New York Forex Market Buzz. In New York afternoon trade, Euro-dollar is at 1.4715 as of 1 p.m. Eastern Time. Sterling-dollar is at 1.9735, while dollar-yen is at around the 109.38 level. In today's U.S. data, the National Association of Realtors Pending Home Sales Index took a nosedive for the month of November. The minus 2.6% came in sharply below forecasts. Meanwhile, the October readings showed a rise of 3.7%. Joining me now is George Davis, Chief Technical Analyst at RBC Capital Markets. Good afternoon, George.
Good afternoon, Remy.
Thanks for joining us, and Happy New Year.
Same to you.
Thank you. Well, in the first full trading week of 2008, we're seeing a seesaw action in U.S. equities, and this has been weighing on dollar-yen as well as the yen crosses. And also, euro-dollar has been fairly range-bound for the past hour and a half. But George, let's start out with the bigger picture. If you could help us sort out the fundamentals currently affecting the U.S. dollar.
Well, in terms of the key fundamental drivers right now, I think the price action in the equity markets remains the main catalyst in terms of what the other markets are doing on a global basis. And by that, I mean the price action in the equity markets has a direct link to the market's appetite for risk aversion. And recently, what we've seen is we've seen the equity markets remain under pressure. So in general, I think we still have a market where risk aversion remains at relatively high levels. And as a result, on balance, over the last month or so, we've been able to see the Japanese yen rally as carry trades are unwound as part of the theme of increasing risk aversion. And at the same time, we've also seen the euro-yen cross come under some pressure, moving from the 163 level down towards the 160 area. So I think the main theme that people want to focus on right now is the theme surrounding risk aversion, and a good proxy for the market sentiment in that regard is the equity markets in terms of how they trade.
Well, George, given that rate differentials, concerns about a slowdown in global growth, and also inflation, economic data will be key in the coming sessions, and specifically with the ECB and BOE rate announcements, if you could give us your forecast for euro-dollar and sterling-dollar.
Yeah, sure. In terms of expectations right now, both in terms of the rate announcements coming up on Thursday, our house view is that we're unlikely to see either the Bank of England or the ECB make a move on the interest rate front. We think that they're liable to stand pat this time and look to cut rates at their next meetings. And I think what that's probably going to imply, at least over the shorter term, both for the euro and the sterling, is some additional potential downside pressure, especially in the case of the euro. The euro's been fairly strong of late, and from a technical perspective, it's moving into overbought territory right now, and it seems to be losing some upward momentum above the 147 level. So I think more so than cable, the euro might be a little bit more vulnerable to a bit of a pullback now, just given the fact that cable has been under pressure for the past couple of weeks now.
Well, shifting our focus over to commodities, we're seeing commodities soar today with COMEX gold hitting a new record high at $883.10 an ounce. So, George, if we continue to see long gold, long crude, how much should this be factored in into the Aussie dollar as well as the Canadian dollar?
Well, in terms of the commodity currency, there's some interesting dynamics at play right now. I think the Aussie dollar is having a bit more of a direct linkage to the price performance of commodity markets. The Aussie dollar's up almost a full big figure today in trading, and as you mentioned, we've seen gold break $880 an ounce, and crude oil is moving back up above $97 a barrel. Now, the Canadian dollar, on the other hand, I think the dynamic has shifted a little bit in the sense that although commodity markets still remain important, what the market's focusing on now is the price move in equity markets. And what we tend to see is when equity markets are under pressure as risk aversion rises, the Canadian dollar sells off, and vice versa. So I think the risk for the Canadian dollar as we move forward through the month of January is for it to weaken a little bit further as the equity markets remain under pressure and risk aversion remains high. On the other hand, I think the Aussie has the scope to move up towards the 89-cent level on the back of a pure commodity play.
Well, last but not least, before we wrap it up for today's interview, you did mention risk aversion, and in this time of volatility, I'd like to ask you for your yen as well as Swiss franc outlook. So if you could briefly give us your outlook for the coming sessions for the low yielders against the majors.
Yeah, sure. In terms of dollar yen right now, we've got support coming in at the 107.97 level, resistance coming in at the 110.52 area, and I think the bias from the market standpoint is still going to be to sell dollar yen into rallies. So certainly I think moves up towards the 110.5, 111 area will start to attract some new selling pressure. In terms of the Swiss franc, we are seeing a little bit of a brief recovery here in the Swissy off of its lows from Friday. But again, I think from a technical perspective, dollar Swiss is a little bit oversold right now. But again, I think rallies in dollar Swiss are likely to present a selling opportunity for the market. And I think right now we've got some resistance that comes in at 112.23. and then above there at 113.68, and I think those two levels will attract selling pressure in dollar Swiss, and I think the risk is that we're likely to go down and probe the November lows again down around the 109.58 level.
Okay, George, as always, thank you very much for your insight and analysis into the Forex marketplace.
You're very welcome.
That wraps it up for your Forex Market Buzz with George Davis, Chief Technical Analyst at RBC Capital Markets. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.